We say that Bitcoin is on a need-to-know basis. I think the people that discover Bitcoin, they discover it because they need to know about it. And so that need to know comes at different times for different individuals and different corporations in different jurisdictions. If you're living in hyperinflation in Argentina, then you have a need to know. So the Argentinians were some of the early Bitcoin adopters and big Bitcoin advocates. If you live in Nigeria and the currency collapses, or Lebanon and the bank freezes your assets, you're on a need to know. So normally it's people in struggling economies, they get it. And then a company that's well run, that's very successful, doesn't have a need to know. Very affluent on the Upper East Side of New York, don't necessarily have a need to know. They come a bit later. But when my company ran into travails and struggles during the COVID lockdowns of 2020, we had a need to know, and we started looking for a solution. So I would say that people adopt and embrace Bitcoin when they run into some challenge in their personal or professional life that causes them to open their mind and think, I need a new idea. I need to embrace a new way in order to move forward with life. I think in March of 2020, during the COVID panic and the lockdowns, the economy came to a grinding halt. Everybody went home. We had the 15 days to stop the spread. There was a lot of anxiety in the economy. And then we saw interest rates get taken to zero. And it's almost like the economy just stopped. I mean, traffic stopped, cruise ships stopped, airplanes stopped, restaurants closed, hotels closed. Interest rates went to zero. And I was sitting in front of my pool in Miami Beach, and it was just dead calm. But I was watching CNBC, and in CNBC, at some point, it became clear that there was that if you actually were in Wall Street or you owned a bunch of financial assets, you're probably going to be okay. But if you're on Main Street and you're trying to actually do things like run a restaurant or a yoga salon, you were going to have a bad year. And so at that point, I said, well, I have all this cash and it's worthless, like zero interest rates. And the central banker said, we're not even thinking about raising interest rates for 4 years. So you have a non-performing asset. And then I looked at the government basically printing money. I thought if we shut down the economy for 2 years, that's going to cost a lot of money. And that's going to get printed. And so I saw hyperinflation, coming at the end of those lockdowns. And I noticed my money was a melting ice cube. And I thought, well, I need to do something with the money before it becomes worth 40% less. And that's the point where I said to a friend of mine, so tell me about that Bitcoin thing again.
By dismissing a 150,000 Bitcoin price target for this cycle as far too conservative, describing it as silly low, with Bitcoin poised to achieve broader adoption by nations, funds, and corporations as a store of value. Expectations are rising for a much higher peak in the cryptocurrency's valuation. The trader Alex Becker argued that a 150,000 target underestimates Bitcoin's potential in the current climate. He emphasized that surpassing this level would only fuel further momentum, suggesting Bitcoin could surge to 250,000 or even 400,000. According to Becker, the anticipated adoption by global entities fundamentally shifts the narrative around Bitcoin's valuation. At 150,000, Bitcoin's market cap would represent just 1/6 of gold's, an absurdly low given Bitcoin's increasing recognition as a strategic reserve asset. Echoing this sentiment, crypto analyst Will Clemente highlighted the game theoretic implications of nations adopting Bitcoin, predicting a potential long-term price of 1 million once major economies integrate Bitcoin into their financial strategies. The momentum for these bold predictions stems from Bitcoin's market cap, which currently hovers around 1.97 trillion, compared to gold's 18.44 trillion. Analysts argue that as institutions and countries adopt Bitcoin for its inflation-resistant properties, its value will inevitably climb. Asset management firm VanEck forecasts Bitcoin reaching 180,000 by 2025, while Bitfinex analysts envision a price of 200,000 by mid-2025, 2025. Becker also noted that earlier cycles had more conservative price targets due to Bitcoin's limited institutional acceptance. However, with the cryptocurrency now entrenched in financial discussions and growing adoption, a 150,000 cap no longer aligns with the asset's trajectory. Recent speculation around Donald Trump's inauguration and potential pro-crypto policies have added fuel to the bullish narrative, suggesting that political developments could further accelerate Bitcoin's rise. With heightened interest and evolving global dynamics, Bitcoin's path forward looks increasingly ambitious, leaving a 150,000 target seeming more like a stepping stone than a peak.
When I was thinking about it, it was 4,000 or 5,000 a coin for Bitcoin, and when we started buying it in size, it was in the mid 9,000s and 10,000, 11,000, and it's 10x since then. But to be clear, the brilliant idea of Bitcoin is digital property. It's Cyber Manhattan. I've created a city in cyberspace that's 276 blocks wide, 276 blocks high, 276 blocks deep. You're buying 1/21 millionth of all the money that there's ever going to be in cyberspace. And one day, the 8 billion people are going to want to put some of their money there. And it's the most simple idea imaginable. Do you want to buy 1/21 millionth of all the money in the world for all of eternity? Like the product's going to be the same in 100 years, 500 years, 1,000 years. So think of it like, buying Manhattan in 1750 and you're 100 years late. And someone goes, you're 100 years late. The guy that's selling you the building paid less than you're going to pay. Aren't you afraid you're overpaying? And it's like, well, I'm going to dump it to a guy in 1770 for more. And that's stupid because you should buy it every year from 1650 to today. And it's the greatest city in America. So why wouldn't you want to own 67 blocks of Manhattan? Just like why wouldn't you own 67 blocks of Bitcoin? So you're never going to be too late if you understand that the future digital economy is going to be built on top of 21 million blocks of Bitcoin.
The possibility of a spot XRP exchange traded fund approval has sparked widespread speculation about the cryptocurrency's potential price trajectory. ChatGPT, Popeye's language model, suggests that XRP could reach prices between 10 and 50 under favorable conditions, emphasizing the potential for significant market impact. Such a scenario would require robust capital inflows from institutional and retail investors, alongside positive market sentiment and regulatory clarity. Currently trading above 3, XRP's rise has already captured attention, and an ETF approval could further amplify its value. ChatGPT envisions a moderate scenario where prices climb to 5 or 10, driven by steady investments. In a more extreme bullish case, the price could surge to 50 or even 100, fueled by large-scale institutional adoption, increased global usage of XRP Ledger for cross-border payments, and speculated buying similar to Bitcoin's previous bull runs. XA's Grok offers a more conservative perspective, forecasting XRP's price at 5 to 15 following an ETF approval. With institutional inflows playing a crucial role, both models agree that while the potential for exponential growth exists, the market is not without risks. They caution about the buy the rumor, sell the news phenomenon, where early investors might sell off after initial price spikes, causing temporary pullbacks. Historical trends lend credence to these warnings. For example, Bitcoin experienced a significant 21% drop shortly after its first spot ETF approval in January 2024. Despite initial price surges, such patterns underscore the need for investors to exercise caution, even in a bullish environment. Market analysts further fuel optimism, with predictions ranging from 10 to 20 for XRP's price. Chubb Morgan analysts suggest that a spot XRP ETF could attract $3 billion to $8 billion in inflows, driving substantial price increases. Similarly, Prominent crypto analysts like the Cryptic Wolf and Credit Bureau Crypto foresee targets between 10 and 20, with some hinting at even higher possibilities. The political landscape could also play a pivotal role. Following Donald Trump's victory in the 2024 U.S. presidential election, there is growing anticipation of regulatory changes favorable to the crypto industry. Speculation about a U.S.-based crypto reserve prioritizing coins like XRP and Solana has further buoyed market sentiment. With XRP's current momentum and the potential for a spot ETF approval, the future holds exciting possibilities. While risks remain, the alignment of institutional interest, regulatory shifts, and technological adoption positions XRP as a cryptocurrency to watch. Don't forget to like and subscribe, and let's keep this bull run going.